Aloha, this is Joshua Hayes at BigWaveTrading.com coming to you with November 5th's market wrap-up for November 6th market. As we can see, what I've been talking about, that we might fail at the 50-day moving average, the indexes didn't even get a chance to make it back at the 50-day moving average, as the S&P 500 fell 5.27%. The Dow Jones Industrial Average fell 5.05%. The NASDAQ fell 5.53%. And the small cap 600 fell 5.3%. So overall, a pretty nasty day on all of these indexes. The one key thing to remember is that when the price is below the white and purple line, you do not go long the market. Only when price is above the white and purple line, the 50 and 200-day moving average, should you go long this market. And as you can see, since the beginning of 2008, we all year long, we have been moving lower. So as we looked into the lower prices, and now we see an extremely oversold condition getting worked off, we can see before it even reaches the 50-day moving average, it decides to go ahead and try to fail. So that's not a positive to see. The dollar's holding up. It was good to see the dollar up today with all the carnage out there. But basically what we have here is a market that's still mired in a very deep, significant downtrend. And really, ever since the October rollover, that then put us under the November 50 and 200-day moving average and has kept us under the 200 or 50-day moving average the entire way since then, there has not been a good time to go long stocks. In March, it looked like we might bottom out there and move higher, but that quickly rolled over, and then we continue to sell off harder. So if there's ever a chance of moving higher now, yeah, it could be. We have a lot of low volume here. If we base out for a long time, we could then move higher. That would build out nice long bases. So it's not all over, whatever, but we'll just see. I'm just going to go ahead and keep a positive spin on things and just hope that capitalism isn't completely dead. But yeah, it really doesn't. It doesn't matter. This market will eventually pass. There's still going to be good stocks out there. There was one long that I've been talking about, but it looks like it's going to, TFSL. I mean, when you got good-looking charts like that out there still, at least, it gives you some comfort that not all things are horrible. But the bottom line is that the market's still mired in a downtrend. I continue to say the same thing over and over and over. As long as this price is below the 50 and 200-day moving average, I'm going to stay bearish. I don't care if it's on heavy volume or low volume. It doesn't matter. Just the fact that the price is below the 50 and 200-day moving average is enough to completely keep me away from this market. The only good news is that there's still a lot of fear out there. VIX is pretty high, but the CBOE put-call ratio, I believe, in the IBD yesterday was only or today I think even, was 0.91, I think. So that's nowhere near the 1.5, 1.6 I need to see to have a significant bottom. So I think that there's more downside to come. I have 3 new shorts tonight, and I think I'm going to stick to that side of the market. It seems to be working. This is Joshua Hayes at BigWaveTrading.com. Aloha.